You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from this little thing we like to call the old Options Insider Radio Network. We have a plethora of choices, a plethora of programs on the old network for you to choose from. Of course, the Option Block. When you're not streaming and downloading the old Option Block, then of course there's Options Playbook Radio and Options Boot Camp and the Advisor's Option, Trading Tech Talk, you name it, our Options Insider Radio interview program, a legion of programs, Futures Options Roundtable, the long and short of futures options. I'm sure I'm forgetting a few in there, but there's no shortage of programming. No matter what your interests are in the world of options and indeed derivatives, chances are we've got something for you. And if we don't, let us know. We've got 13 programs, but there's always more coming down the pike. Maybe we can add something that you're interested in. And how do you get us that feedback? Well, a lot of great ways to do it, but perhaps the easiest way is to download that mobile app that we have for iOS, Android, even for the Amazon Kindle Fire devices. And when you download that app and when you build your My Shows playlist in the app, you'll see whenever you download or listen to a show, you'll see a tab right there for contacting us. And you can do it a variety of different ways within the app: Facebook, Twitter, email. You can even leave us a voicemail and let us know what you think about the app, about the show. Maybe you have an idea for a new show. Let us know. We're always open to interesting ideas, great feedback, great commentary, particularly if it's making fun of that rock lobster guy. We welcome all of those. All right. Check it out, the Options Insider Radio Network mobile app, wherever you find apps for all of your legion of mobile devices. All right, and joining me on the old all-star panel today, starting off with the aforementioned and aforemaligned Mr. Rock Lobster, none other than Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the program, sir. Happy post-Father's Day to you.
Thank you. Always a pleasure to be here, even though I'm maligned every once in a while, but I don't take umbrage to that particular malignment.
You are a man full of umbrage.
Full of something.
All right, and also joining us on the old program, none other than the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir.
Good to be here today. Quiet day in the market, but a lot to talk about.
There's always a lot to talk about when you're on the show with us, Alex. You help carry us in all sorts of fun and unexpected directions. That's why we like having you on the show here. That, and indeed, of course, your array of fancy hats.
Yeah, the hats are becoming an issue. The wife is complaining about closet space. So.
You might need a storage area for all of the fancy headwear you're acquiring here on the program.
It's in discussion.
All right, and last but certainly not least, joining us from the hinterlands of St. Charles, Illinois, Mr. Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here, and I want to see your hat collection someday, Alex. It sounds very intriguing.
Come on over.
Okay.
I like it. Maybe we'll do the next show live from Casa de Viceroy. I like it. All right, and with the Avengers assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, welcome to the Trading Block. This is, of course, the portion of the program where we break down what was moving, what was lighting up the old tape, what was catching our eye across the broad, vast ocean that is the financial market. And as Alex alluded to at the top of the show, really there wasn't a whole heck of a lot of macro index movement. Most of the major indices closing fractionally unched or pretty much exactly unched on the day, up or down a handle or two in either direction. Not a whole heck of a lot really to parse there. VIX cash taking a bit of a bid, up about half a point to the 12.65 region, hovering around the upper end of that band that it's been in for quite some time. And those are pretty much the primary developments going on from a macro perspective. I know, Uncle Mike, you like to watch a few micro names like those precious metals and like that fruit company and perhaps a few others. So why don't you go ahead and give our listeners a bit of a rundown of what caught your eye in today's activity or perhaps lack thereof.
Yeah, I kind of lean towards the lack thereof side of it for today. I think a lot of people are just kind of sitting on the sidelines and waiting for the Fed meetings coming out today. Just with what's going on in the BBI world, or whatever world you want to call my world these days, the hinterlands, whatever it may be. Yeah, I'm just looking at the S&P. We're up a point today, a little over 1.5 points, I should say. Looking at Apple, that was up 1% on the day, so that was probably the biggest action in my world today. But just in some of the stocks with which we're in right now, where we have some smaller positions, just looking across the board, and it's a lot more of the same thing with not a lot of action pretty much anywhere. So if you can stay awake today, that's a good thing. But I think most of, like what Alex said, there is a lot to talk about with the events going on throughout the world, as well as this Fed meeting coming up.
And for that fruit company, you still pretty much just rocking long stock, long put, or have you started to play around to the upside a little bit?
We tried to get filled on some ups on. What we're looking to do with Apple is sell either some calls and or some call spreads or a variety of each. We're wanted to be kind of picky on where we got filled, and glad we were on Friday, so to speak, but not by much. So we're in the stage, and we're in the process of looking to start selling some calls and or call spreads and both in the coming days.
And Mr. Rock Lobster, there wasn't a heck of a lot going on from a macro perspective, but some individual names did have some action today. Over the weekend, our good friends, no shortage of headlines for them. This is, of course, Tesla, the electric car makers, and their founder, Elon Musk, very PR-friendly, shall we say, and taking another spin at the old PR train these days, announcing that they're making their patents at least ostensibly open source. No one really knows the details of that or how that's going to work, but in a nutshell, what the general perception of that is that instead of having all these companies hoard their patents and sue each other into oblivion, Tesla's coming out and saying we'll let people have reasonable use of our patents and we won't sue them. And I guess judging from what the market says today, this is a good thing for them. They were up about nearly 9%, 8.8% or 18 handles on the day, closing well north of the 200 handle, 224.61. So the market's saying, hey, this could perhaps feed back into their infrastructure. One of the biggest problems, of course, facing the electric car industry is the lack of infrastructure, and Tesla alone can't afford to build superchargers throughout the country and all the other stuff that it needs to really make their cars happen. So perhaps they can get some other big names, some big automakers into that fray. It might help grow their product line as well. So apparently the market's smiling on that name. Mr. Rock Lobster, if I had to wager, I would say that Tesla was a frequent topic of conversation in the old option pit chat today. Am I correct, sir?
It was. We had a back spread on it, but we had a short call against it, so we ended up making not a bunch on it today. So it was anyway. We've been looking at the vol being cheap there, saying it can't stay that way forever, and sure enough, it just goes kablooey. So But yeah, we definitely look at it, and that was the thing. I mean, the vol, right? It's one thing about you don't want to sell vol into the hole, but it was I think it made like a 2-year low on Friday for volatility. And lo and behold, it has a little tiny move on Monday. So, we look at it every once in a while when it becomes interesting, and it went off to the races.
So you're saying then you had a back spread with a short call kicker? Is that what you're saying?
Oh, yeah, it's kind of like a long time spread way above the market and a put, and it went right to the strike, to the long time spread strike. So we're just waiting for it to, it could end up being very nice, but we're going to have to wait a few days here to see how it all turns out. But if we just would have left the strangle alone, it would have been, oh my, something gigantic. So
they don't teach you that in Options 101 out there in the Peak Coast.
I guess not. I missed that. Class.
Too busy eating sandwiches.
Or burritos on the floor.
Yeah, that's true. I was always jealous of you guys. We'd get fined for having a candy bar in our pocket, and you guys were eating whole meals down there.
I actually saw, back in the old days, in the pre-9/11 days, in the early 90s, I actually saw a guard reach into one of the quote operators' purses and pull out a Big Mac. She had a couple of hamburgers in there. You can't bring these onto the floor, but she actually had a personal sidearm. So he allowed her onto the floor with the gun, but he took out food.
That, if anything is emblematic of pre-9/11 security on the exchanges, that is it.
I mean, that you couldn't script it better than that.
That is pretty good.
Can't have that Big Mac.
A weapon where you could kill half the floor, no problem. But a Big Mac that might mess up our computers or cause some gunk, forget about it. That special sauce will ruin everything.
Yes, those Quotrons. They're just not as tough as they look.
All right. And Mr. Alex, what was catching your eye over there in the land of OX? I'm guessing Tesla, a perennial favorite with the OX clientele. I'm guessing that was somewhat active again today, as well as perhaps I'm hearing rumors of some old internet standbys like Yahoo. Was that indeed the case over there at OX today?
Yeah, that was it. Tesla has been it's one of those names that it pops into the top 1, 2 in terms of volume, and then it drops down to the 9, 10. Lately, it had actually dropped down a bit. And of course, today, as Andrew pointed out, the big move it picked up. Yahoo today on the Alibaba news, Yahoo is kind of the trading surrogate for Alibaba at this point until it gets listed here. So Alibaba's updating of its offering memorandum showed some disappointing numbers. So that knocked 5% out of Yahoo today. The other thing I'll talk about, and I talked about this a little bit, that sometimes I'm the person who, when Schwab customers or OX customers want to do a deep dive on volatility, I'm the one who gets asked to sometimes enter into those discussions. And spoke to a client today, very, very large client, very sophisticated client, who pointed out something to me today that I normally look at that I hadn't actually looked at, but that's the fact that the volatility on gold dropped below the volatility of the S&P 500 today. And that client's observation was that every time that's happened in the past, that's preceded a big rally in the S&P. So that's kind of an interesting observation. I want to go back and play with that number a little bit, but obviously on the show we focus a lot on VIX and the volatility of the Nasdaq and the volatility of the Russell. But individual stock volatilities, after I had this conversation with the client, I began to look at some of the individual stock volatilities. And actually the way I do that is I go to Hub, because the Hub tiles, the IDEA Hub tiles, have the volatility numbers in them. They show the metric we're drawing from the SIBO, and volatility is low. I mean, the Googles and the Amazons have really come down in volatility. Gold volatility is in the low 12s, and VIX is in the mid 12s, and they actually crossed today, which is kind of interesting, because I would have thought that given what was going on in the Mideast this weekend, gold would have had more of a pop, or at least gold would have had kind of the same follow through that oil has had, and it really hasn't. I would have thought the GVIX, the gold VIX, would have popped more, but it's kind of interesting. And as I say, this customer's observation that when that happens, it's usually a bullish event for the market. I'm one of the people that's in the camp that absolute levels of volatility don't tell you a lot about where markets could move, but I think relative levels of volatility do. So I thought it was a very interesting observation, and I'll be watching, as all of us will, very closely over the next couple of days if we finally get some follow through in the equity market.
Now, that's a good point, and we actually touched on this a little bit on our Volatility Views, which is, of course, our weekly program for the very active high-end retail vol trader, as well as a lot of the institutional players out there. And we had someone write in with this exact point, talking about what's been going on out in gold land, in particular the increasingly decreasing vol out there in the land of gold. I know what you guys pull for Idea Hub is indeed GVZ, the Gold Volatility Index. And you're right, that one trading today right around the 12, south of the 12 half handle, 12.41. VIX cash, of course, ticking up a bit, 12.65. So those two indeed inverting here. And that was a mystery to our listener out there on the Vol Views show, of course, because a lot of people who come to the commodities from an equity mindset, they mistakenly think that everything out there trades with investment skew. And they're used to, the puts getting that bid to the downside, the calls getting crushed to the upside. And they think everything trades that way, forgetting that even though it is a very popular product, even though it is an ETF that you can put in your securities account, it still is representative of a commodity. At the end of the day, their skew a wee bit different. But you're right. I kind of tend to side with you a little bit, Alex, that I would have thought the combination of what we saw coming out of the Middle East would have inserted a little bit of life out into the commodity realm from a pure vol perspective, if nothing else. And yet we really didn't see that. It kind of shrugged it off. Like we said last week with the VIX too. The VIX kind of shrugged off what was going on in the Middle East, and even gold VIX shrugged it off. By the way, I just want to comment yet again. I'm looking at the numbers while we're talking here for the GVZ, which is the gold VIX, and it's amazing. GLD, super popular. VIX, super popular. Mix the two together, you think that would be chocolate and peanut butter, tastes great together? No one on the planet wants to touch it. It does about 6 contracts a day, which is stunning. Open interest is only about a couple hundred contracts. So there you go. Take that for what it's worth. But still, interesting developments. I think you're right there. Mr. Giovinazzi, I know we touched on this a little bit on Vol Views, but what's your take on the ever-shrinking world of gold volatility?
I think it's like a direct result of this QE thing going away. Right now, the path for the Fed seems to be they're going to get out. So when everybody can see sort of the inflation path, or let's say lack of inflation path, seems like the gold vol gets really low. When nobody wants gold vol gets pretty low. And right before the Fed said they were going to start to step out last year, gold volatility was really low. Because it basically, there wasn't, there were hints that the Fed all of a sudden now was going to do something, and that kind of took the bloom off of gold as it kind of came from 1,800 down to 1,500. And, gold volatility stayed pretty low that whole time. Besides that, I guess 1 month period when, gold, just the realized vol went crazy, it's been pretty steadily coming down since then. So normally, what I see, cheap gold vol usually means gold's going down. If gold's going to start falling apart, I can't disagree with that guy's investment thesis that that's pretty good for equities. Maybe a low inflation environment generally is better for equities. So that's kind of what I would see coming. I don't own any gold anymore, so it's been a while. But that's I can't disagree with that one client's sentiment there on the cheap gold vol and the cheap stock vol.
Uncle Mike, I know you play gold on a regular basis in GLD. What's your take on the ever diminishing gold vol out there?
Yeah, it's definitely down. I think that the bottom line is that if markets don't move, then a lot of times volatility is not going to be there. And from a relative perspective, if you look at how much gold's moved, it really hasn't had a very big range over the course of the last year or so. Over the last year, the high has been, I'm just bringing up a chart now, 137. The low has been 114. And this is coming off, and that might be a big range if you're in something like IBM or something along those lines. But this is coming with a commodity that has had highs at the 185 level as recent as 3 years ago. So I think that gold volatility should be where it's where it should be right now, because of the fact that it's really been like watching paint dry over the course of the last year or two. And I think it's justified based on the movement of gold itself. Now, as you guys all know, definitely been a gold bull for a long time, still am. But in the near term, it's really not been moving a lot.
Have you ever been tempted to delve into GVZ at all?
I'm tempted all the time. I would love to get into GVZ in one way, shape, or form. But like you said, 6 contracts. I look at GVZ. It's on my screen every day. But 6 contracts a day, I can't justify it for anybody.
It is startling. I do kind of feel for the SIBO on that one. That would have seemed to have been a home run, and yet no uptake whatsoever. Always amazing. Look at the minis, how just a new product could succeed or fail, almost in the most random and haphazard of fashions. All right, that is going to do it for the old trading block today. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, you know what that funky tune means. It's time once again for the old odd block. This is, of course, a portion of the show where we break down what was weird, what was wild, what was catching our eye from an unusual options activity perspective. Going to kick things off out in semiconductor land, in particular, Fairchild Semiconductor International, Inc., ticker symbol FCS, closing today, $16 and some change, up about a quarter or nearly 2%. On the day. This is the name that does about 400 contracts a day on average, doing over 8,000 today. So a size day out here in FCS. And in particular, what caught our eye out here was, looks like the old roll up and out, but for some size. We saw someone coming in, and we profiled it on the site this morning, trading 500 of the July 16s and 1,000 of the Aug 16s and 2,000 of the Aug 17s. It looked like they were closing sales on the 16 strike and then an opening buy on the 17 strike, so your standard up and out. But as the day progressed, we saw that 17 activity continue to build and continue to build to the tune of about 5,500 contracts by the end of the day on open interest of just 8 contracts. So a lot of opening paper out there. Whoever this guy is, thinking he had a decent run probably on that 16 strike. If you've looked at the chart here of FCS, ever since early May, this name has just been pretty much straight up, trading in the 13 handle about a month or so ago, and now trading well over 16. It's been pretty much straight up. He's probably done fairly well on those 16s and now wants to take his profits and put a heck of a lot more on the table out there on the 17 strike to the tune of about 5,500 contracts. Senior Rock Lobster, what is your take on this relatively sizable up and out here in FCS?
I think this customer wants to keep the party rolling.
Exactly.
It's like all these semiconductors lately. I'm surprised they haven't come under. Like Intel was up, is making it's like a 1, 2, 3 year high, 5-year high, or something like that right now in the 30 handle. So all these semiconductors, all of a sudden, everybody's like, well, wait a minute, maybe somebody wants them. So all I can say is the role, I guess, he's just taking his money off the table and trying to play with some house money, or he wants to leverage. I think he clearly, feels like they want more out of this thing. So I think a lot of these semiconductors are just dirt cheap. So even after their run, they're not hugely expensive. So full disclosure, I'm long some semiconductor stocks, but that's what it looks like to me. It's probably worth keeping an eye on to see if, or you could look at the SOX or something like that, although that kind of trades by appointment now as an index, the semiconductor index. But yeah, I think they think things are going higher. That's what it feels like.
Yeah, where Intel goes, the rest of these names tend to follow, and Intel, of course, lighting it up of late. They were trading as low as into the high teens towards the end of last year, and now breaking through the 30 handle today, closing at $30 and a penny. So Intel breathing some new life, perhaps, into the old semi-land that had languished a bit. Particularly Intel, they were seen as being very late to the game from a mobile perspective, and the desktop market, not really what it once was, so they were seen to be a little bit adrift. Of course, they're Intel. They can afford to be adrift for a while because they have billions in the bank, And now they've pivoted, and the stock is off to the races, and everybody else is riding that wave. All right, next up, we have Nexstar Broadcasting Group, ticker symbol NXST, closing today a penny shy of $46, up about 16 cents or so on the day. This is the name that does about 800 contracts a day, doing a whopping 12,600 today. And pretty much all of that action, the lion's share of it at least, locked to July. Very near-term paper here in NXST. What we saw in particular on this trade was 5,000 of the July 45s going up for about $3.50, and then 7,500 of the July 50s going up for $1.35. So if you're playing the home game, listeners, that is a total of 12,500 roughly contracts going up in this one trade. Looks like, given the open interest on these strikes, there is some size open interest on the 50s, about 11,000 open there, but not a heck of a lot, only 1,200 open on the 45. So that is opening. It could be piling in on the 50s, but it looks like, if we had to wager, probably buying some stock and then dumping a bit of a at-the-money / upside stupid against it. Perhaps not being able to pick the better of the two evils on those two strikes, so he takes both of them. A Tusa-esque style trade. Mr. Rock Lobster, is that your take as well here for NXST?
Yeah, actually, Mark and I we debated a little bit on this one earlier today in our chat about what the customer was doing. You know, the volatility here is pretty high. It's like a 55 vol. I don't know what's going on for the Nexstar Broadcasting Group, if it's a takeover target or something, but I mean, there's no earnings coming out. It's trading at a 21 vol, and the options are like 55 vol. That at the money straddle in July is $6, $6.50. So it just looks to me that this is somebody that owns some stock that's saying, okay, I'm going to take some of this juice and I'm taking it today. So it feels like buy right paper to me. We thought possibly there could be some sort of ratio action, but just they kind of hit the bid on all the calls is what it looked like. So even with the vol up, which is again very, very strange looking type paper on how this is, to be honest.
Uncle Mike, were you floating around Nexstar today?
Well, you know, I just figured one of these days I'm going to be in one of these trades just to say that I'm a part of it, and I think I'm just going to do like a stupid throughout every stock out there. I think just to get my clients in the stupid portfolio, just so they can make some stupid money.
I like it. That's a good way to proceed, I think. A stupid in every listed name. I kind of like it.
There you go.
Nothing can go wrong with that strategy, sir. I like it. All right, moving on to our next name. This is a repeat offender in the old odd block. This is St Jude Medical, ticker symbol STJ. Closing today, $66.25, up about a little bit over $1, or nearly 2% on the day. This is the name that does about 1,500 contracts a day, doing not a ton of size, about 3,700 today. So it wasn't pure size that caught our eye out here in St. Jude as much as it was what actually went up. In particular, it was a lot of interest in the July 70s. When we profiled it on the site, 1,598. By the end, that of course went up in one large block, went up pretty much lifting the offer, so it looked like a buy. By the end of the day, we saw nearly 3,000 going up, 2,787 to be precise, on some size open interest, 11,000 and change. It looks like, again, the bulk of this activity focused on the buying end of the spectrum. Again, there are some takeovers looming in this space, so this paper could be related to that. If I had to wager, probably some closing paper here, perhaps, on this size open interest on the 70 strike. Is that your take as well? Senior Lobster, perhaps they're a little bit skittish of what's going on out here, so they're closing out some shorts to the upside?
Yeah, they could be. The closing shorts are obviously these OX75s were new buying paper. They also traded the OC80s paper buying. So vol's up, people are buying calls. I mean, I would think St. Jude would be more of an acquirer, not an acquiree, more similar to Medtronic, but stop people from running the stock up and buying a bunch of calls or covering their shorts, maybe their short buy right calls. So
I neglected to mention that they also saw the OX75s going up 600 and change. It looks like buys, as well as a couple hundred of the OC80s. So buying paper all the way up to the upside here in all the months out here in St. Jude.
So they got to have it. So I think, like I said, I think St. Jude would be a buyer, but stranger things have happened, as Mr. Tusaw and Mr. Famous Hat would know.
All right, wrapping it up here in the old odd block with a name we haven't talked about in quite a while. This is the Barclays Capital High Yield Bond ETF, aka Junk. JNK closing today $41.58. Essentially unched on the day is the name that does about 1,100 contracts a day, doing nearly 11,000, so nearly 10x their ADV today. And what we saw when we profiled this on the site was some action all the way out in the SEP expiration cycle to the tune of the SEP 41 puts. They went up for 70 cents 5,000 times, as well as 5,000 of the June 41 puts going up for a nickel. Looks like somebody, probably the old rolling out here, rolling from June out to SEP. Whenever we see someone doing that much size for a nickel, chances are it is a close. Open interest, pretty sizable in June, 10,000, only about 3,500 in SEP, so clearly open in paper out in SEP. Take us home, Senior Rock Lobster, on this put roll here in Junk.
Yeah, I think this whoever this investor is or trader, they're long the JNK, and they just keep rolling these puts every 6 months. It pays a decent dividend, and I can only guess they've just been sort of rolling this up. What's strange is that the Junk index is getting close again to its 2-year high. So I think, they're buying these junky little puts, no pun intended, just in case, the thing falls out of bed, because the volatility is so low in here, you don't pay anything for these puts. So as a strategy, it actually doesn't work, too bad. Every quarter, you spend a little money on the puts, and it usually soaks up a portion of the dividend income. But if you do fall out of bed, the puts, give you a nice. They can give you a nice sale, or even load up on some more of the underlying. So, just I think sort of a standard protected put play in this thing.
Yeah, there may be more going on here. The Fed actually floated a proposal today. Now, when I say floated, it got into the press. It got into the Financial Times. I don't think the Wall Street Journal carried it. But the Fed, I'm going to paraphrase what the proposal was, and that was exit fees on bond funds to keep the volatility of a bad event modest. So that's something that may be going on in Junk. It's the Fed trying to limit the exit door if we get an event. And I'm kind of surprised that the trial balloon didn't get more exposure today. But I suspect as more and more people see it, you're going to see commentary about this. And it's going to impact, if they do it, which doesn't mean they will. A lot of times Fed trial balloons are just that. They're just testing the water. But it's going to impact the Junk portfolios, and it's going to impact the PIMCOs in a big, big way if they do it.
All right, Alex, good stuff as always. And listeners, if you can't get enough of Alex, you're in luck, because it's his turn next. It's time for the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It is time for the Viceroy to take the reins and guide us deep into the dark recesses of Options Express by Charles Schwab. Mr. Viceroy, what was going on over there in OX by Charles Schwab today, sir?
So the very dark recesses, as I mentioned on an earlier show, a couple shows back, Schwab Private Client Group currently has a free options trading offer. And I need to mention this with the proper caveats. Those are essentially managed accounts that do pay some fees and some commissions, but currently, if you're in the Schwab Private Client Group, you've got an account in the Private Client Group, talk to your rep before you start banging out 2,000 VIX and 1,000 S&P. Talk to your rep, see if you're one of the accounts that qualifies and what you need to do to qualify. But currently there's a commission waiver on options trading. Talked a little bit about the fact that darts, the industry was slow in April, slow in May, picked up a little bit at the end of May. I do want to sort of showcase a couple OX products that actually did very good in April and May, and in slow markets and in markets without a lot of trend. We on the show talk a lot about market neutral strategies, or essentially premium harvesting strategies. And I know I'm starting to sound like a broken record, but one of the products at OX that did very well in May was the Idea Hub, which is my baby. But if you're looking for trade ideas, if you're looking for market neutral ideas, visit the Idea Hub, the premium harvesting section, which focuses on 16 names. And the metric is pretty straightforward. We take a volatility metric from the SIBO. That means we take the VIX if you're looking at the S&P, any of the variants of the S&P, the SPX, SPX PM, or SPY. We take things like the GVZ if you're looking at gold, and we identify one standard deviation out of the money, credit put spreads, credit call spreads, and iron condors. Last week, we introduced premium harvesting to futures options. And again, that is an industry first. And we did it on 4 instruments. We did it on options on the crude contract, options on the gold contract, options on the S&P E-mini, and options on the NASDAQ E-mini. Why those 4? Because those are the 4 most active futures options instruments. And if the CME is listening, please give me an electronic option on the big SPX. But premium harvesting for futures options looks at the same things, except it doesn't look at iron condors. It looks at credit put spreads, credit call spreads. Here at OX, we only have a 2-legged trade ticket at this point for futures options. So to do the condor, you'd have to call the desk. There are no additional charges to call the desk. But credit put spreads, credit call spreads, I checked before we went on the air, and there were 60 unique ideas. It does look at weeklies. Weeklies have been very popular. We talk a lot about weeklies on the securities options side. Weeklies, in many ways, have been, I don't want to say a larger success on the futures option side, but they've gotten wonderful traction. The big difference in premium harvesting for futures options is with the E-mini S&P and the E-mini NASDAQ, because the tick size is smaller. We're looking at ideas 1/2 standard deviation out of the money and 1 standard deviation out of the money. We're looking at everything from the second weekly to the second full month. So when I checked it before we went on the air, we had about 60 ideas up in premium harvesting for futures options and about 100 ideas up in premium harvesting for securities options. Keep in mind, these are idea generation tools. Don't just click on one and pull the trigger until you fully understand what you can make, what you can lose, the margin requirements, and at what prices you make or lose money. So a little bit of a shameless commerce plug in the Xpress Block, but in a quiet market, if you're looking for premium generating ideas, if you're looking for market neutral ideas, come look at premium harvesting now for both securities options and for futures options.
I love it. Like I said before on the show, there is a dearth of info and certainly a dearth of good trading ideas out there in futures options land. So any insight, any information that our listeners can look to give some, just get the gears turning on the futures option side of the fence, I think is an excellent thing. So listeners, if you don't know where to find that, of course, surf on over to ox.com. I have to be a client to access that stuff, but I think you'll see it's probably worth it once you start playing around with it. All right, and that's going to do it for the Xpress Block today. Now we're going to keep on rolling right on into our Monday special. Yes, it's time for the Strategy Block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you know what time it is. It's time to call upon Mr. Uncle Mike Tusaw himself. Summon him from the peaks of the mountains. Tell him to don his smoking jacket. Grab those stone tablets and the old bubble pipe and descend to dispense some options, wit, and wisdom. And today, Uncle Mike, the birdies kind of failed me. They kind of turned to the dark side. I've been going with these minions a little bit lately. Yeah, they cost a bit more in terms of delicious jams and jellies and the occasional banana, but I find them to be a little bit more reliable, except for the purple ones. They're kind of weird. But overall, they've been providing me with a decent flow of information. And what I've been hearing today on the old minion rumor mill is some whispers about everybody's favorite SPY and kind of how it stacks up against SPX and kind of how it stacks up against the big futures options products and kind of how they all interrelate. So what do you think? Should I reward my minions with an extra banana tonight or no?
I definitely would. It's funny you mentioned the minions. My son was actually at a birthday party for one of his friends over the weekend with a Despicable Me theme. So everywhere I go, I think of Mark Longo.
Hey, how come I wasn't invited? I love Despicable Me.
Yeah, you should. I wasn't even invited myself.
Oh,
so
well, there you go.
But my son had a great time. But anyway, want to mention something first. This week is the ex-dividend date on SPY. So if you are short any calls on SPY and you don't want to get assigned and miss out on the dividend and or have to pay the dividend, if for whatever reason you're doing a spread on it, make sure that you monitor your positions accordingly going into the ex-dividend date, because that's something that can be a very unwelcome surprise if all of a sudden you are short a bunch of shares of SPY come Friday morning, and not only do you realize that you have to close out the position, but then you also realize that you have to pay the dividend. It's not a fun thing. So make sure that you adjust your risk accordingly if you are short any calls on SPY. Let's go through a comparison. I had a client ask me the other day, should I trade the E-mini? Should I trade SPY? Should I trade SPX? And so I just kind of wanted to give everybody my take on it and hopefully give you the ability to make the decision for yourself if you're looking to trade the S&P in one way, shape, or form. Throughout my years in the business, I have traded all three contracts and will continue to trade all three contracts in one way, shape, or form. But let's kind of give some context as to what would be the best one for individual situations, where the pros and cons of all three of them. First off, let's talk about size. SPY is the smallest contract of the three, and if you own one call option on SPY, then you own a call to buy approximately $19,427 worth of SPY, the underlying. Now, with that being said, let's talk about the next biggest one, and that is the S&P E-mini. Now, that's a futures contract, so it works a little bit different. And all of these with which I'm talking about, these rules and these things with which I say were the numbers and points and sizes, it's not exact, but everyone on this show, I think, would agree that what I'm going to say is going to be what's called, would agree that what I'm saying is in the category of pretty darn close nonetheless. If you own one call option on the S&P E-mini, it's the same thing as owning a 5-lot on SPY. So if you want to trade 5 contract, let's say that you're just a call buyer and that's the only strategy that you do in theory, and you want to have something similar to owning a 1-lot on the S&P E-mini, just simply buy a 5-lot on SPY, and it'll be the exact same, or pretty darn close to the exact same profit or loss as to what you would have on the E-mini. Now, the biggest of the three contracts is SPX. That represents 10 SPY contracts or 2 S&P E-mini contracts. So think of it this way. SPY, 1-lot, S&P E-mini is a 5-lot SPY, and the SPX is a 10-lot SPY. So what are the advantages and disadvantages of trading them? Well, if you want to have 24-hour trading, or 23.5-hour trading essentially, you have to go with the S&P E-mini. So as an example, the reason with which I would consider going to the future side for something along these lines is if I were trading naked options. By doing that, if some type of an event happens at night and I'm watching the 6 o'clock news, and I don't like what I'm seeing, I have the ability to trade out of a position with which I'm in. Now, I'll be honest with you, I don't even know how many contracts I've traded through the S&P E-mini through the years. I can't even tell you if I ever have traded an option after hours. And I also having looked at them, they do become wider bid-ask spreads after hours. Just wanted to give you my experience on it. But you have that ability to trade them nonetheless. And that's something that would be important to me if I were trading naked options, with which I'm not. Now, let's say that you're in need of the 60/40 tax treatment, and you want to get the better tax treatment because you're constantly trading something along these lines. Then perhaps maybe you want to consider the S&P E-mini or the SPX. By doing that, you can get that tax treatment, meaning that let's say that let's say that I were to make a profit of $100 on a Google call. If that were the case, then I've made it over the course of 1 week. Then all $100 is going to be taxed at the short-term rate. However, if I make this $100 profit on SPX or the S&P E-mini, then $60 is taxed at the long-term rate and $40 is taxed at the short-term rate. So food for thought on determining which one would work best for you. If you have a smaller account, or if you're trading a lot of different accounts with a lot of variances in different sizes within an IRA, which is what a lot of our accounts are that I trade, I typically use SPY. There are times that I've used SPX, but I would say the majority of the trades with which I prefer to use, because of the reason that the trades are in an IRA, it tends to be along the lines of SPY because it can kind of fit a little bit better amongst a lot of smaller separately managed accounts. So with that being said, I think it's important to determine which contract works best for you. And this isn't only with the S&P. This would also be with the Dow. Maybe you like to trade DIA versus DJX versus the mini Dow contract, something along those lines, or crude oil. There's a lot of different things with which you can look at on it. But I would encourage you to make sure you're trading the correct contract, whatever one suits your needs in the best possible way.
Well said, Uncle Mike Tusaud. Getting back to what you said at the beginning of the segment there, just on the SPY dividend, there's still so much confusion about that. We touch on that almost, seems like every quarter. I think we should just queue up an article on our site that just is set to repeat every quarter, just saying, alert, SPY dividend alert, watch your short calls, because we get that every quarter. People seem to be still surprised about it to this day. So maybe we should just do our duty and just have that repeat every quarter. But good stuff, Uncle Mike. And now we're going to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is, of course, the portion of the show where we tell you what we're watching, what we're keeping an eye on our trading screens for the rest of this week. There are a few events to keep an eye on. There are a few numbers coming out and some surveys coming out you may want to keep an eye on. Uncle Mike mentioned at the top of the show, the Fed. A lot of eyes on the Fed. Of course, the old FOMC meeting again on Tuesday and Wednesday with a few new names thrown into the mix these days. So people are waiting to see what comes out of that and seeing what impact, if any, that may have on the market. Also going to see some construction numbers coming out of the Commerce Department tomorrow, of course, Tuesday, and indeed some other surveys, the New York Empire survey, and some industrial capacity surveys coming out for May, as well as the old NAHHB numbers coming out as well. So a lot of stuff on the docket for this week. Lots of stuff to keep an eye on. We'll see if any of this really relates back into the broad market, but for now, a lot of people keeping their powder dry ahead of these to see what impact, if any, they may have on the broad market. Uncle Mike, what are you watching for the rest of this week, sir?
Well, like you said, the Fed is probably the main thing with which I'm watching. If the Fed can make something, if the market likes what the Fed has to say, then we could be making new all-time highs in the S&P. So that's probably the main thing. And then trying to stay awake with watching gold at this point in time. And then, of course, my beloved fruit company. Want to see how we are continuing to act post-split. And we'll keep it going from there.
Mr. Rock Lobster, what are you watching for the rest of this week, sir?
That split just killed Apple. All my clients are like, they just do not like the $92 blah stock.
It's not drawing their attention anymore. It's not as sexy as it once was.
No, it's not. Not for the same dollar.
And I'll
Like
tell
I
you
say-
what, the other thing that's a pain in the butt about it, you got the $92.72 calls and those split call options. It's driving me insane.
Yeah, because you got to close them to roll them. What a pain in the patootie. But that's why you make the big dollars. This week, Fed, let's just say this. Implied volatility, S&P 500 is catching a bid. SQDEX, SKU is up to kind of nosebleedy levels with the at-the-money IV where it is. That is not translating into the futures. I don't think the futures were barely up. Volatility futures were up at all today. So it's kind of one of these things where I think people want to stay long, so they're staying long by buying puts if they're nervous. If they're not nervous, they're not buying anything. So the Iraq thing looks like it's a little destabilizing, but nothing compared to the Russian thing we had in the Ukraine, 6 weeks, 2 months ago? It's all it's a blur at this point. So the only thing I could say is let's see how we get out of the Fed. And, if nothing really changes in Iraq, then the Fed keeps some continuity. I think we could see some really crazy low vol numbers again by the end of the week, at least, maybe for one day, like short-term sort of spike down.
Sounds good. And Mr. Viceroy, what are you watching for the rest of this week, sir?
I'm watching the 10-year, clearly watching the VIX. I think Argentina will default this week, and I know as soon as I say that, some of you are saying, who cares? Markets have catalysts, and although I'm bullish, I think it's going to be interesting to see what happens with Argentina now. A lot of hedge funds had their paper, and that's the whole litigation. The Supreme Court today basically said you're going to have to pay the paper, which means I think they're going to default. When they do, I think you're going to see a rush to quality, which will be our 10-year, our 30-year, the German 10-year, in some markets, the UK 10-year, but all the sovereigns except for the Japanese and the Germans are trading around ours, which a year ago, if you said that the Italian and Spanish 10-year would be yielding the same as the U.S., everybody would have scoffed at you. If the Fed does somehow slow down withdrawals from bond funds, that's also going to create a rush to the sovereigns. So watching the Fed news, we get a little bit of earnings starting to trickle in here towards the end of the week. But I think the real telling story here is going to be in vol. And keeping an eye on that and looking for a catalyst, looking for this market to power forward. I think we're going to set new highs. I'm concerned that we haven't seen convincing follow-through, but I think world events may give us that. So that's what's on my radar screen.
When the clocks start singing at Casa Jacobson, that we have run long with the show. So that's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here, my partners in crime, see what they have cooking that may interest you, the listener, starting with you, Mr. Casa Jacobson. What's coming down the pike over there at OX Education and live events?
Showcase 2 events. Wednesday, June 18th, Mike Zaremski from the Futures Desk is going to be doing new customer orientation for futures. So if you're not a futures customer and you want to look at the Idea Hub for futures, you need to become futures eligible. So it's worthwhile to take the new customer orientation. And Thursday, Nina's going to do an intro to our streaming charts product. I know lots and lots of customers are folks who use charts, who live off charts, who love charts. So see the enhancements in the new streaming product and just those couple events to showcase now.
And Mr. Rock Lobster, what's coming down the pike over there at the pit?
Our little chat room is growing. So anyway, drop on by. We'll get you a lovely deal on 1 month of the chat. I think it's like $29 for 1 month. Try it out. See if you can learn any of that option stuff while you're over. And that's about what we got going on right now. We got a couple of the webinars coming up, but we haven't got the date set yet. But they will be out shortly.
And speaking of webinars, Uncle Mike Tusaw, what's coming down the pike over there at RCM Wealth Advisors?
Well, still on a hiatus from webinars for the next couple months, but nonetheless, for those of you out there in the accumulation phase of your retirement and or savings, looking to put in several $100s per month towards retirement, if that you're looking for an advisor who speaks the option lingo, give us a call. My line is 312-212-3531, or feel free to send me an email at mtosaw@rcmam.com.
Again, not to toot your horn too much there, Uncle Mike, but listeners, if you're not taking advantage of this offer, you're pretty stupid. That's all I'm going to say. Financial advisors cost a heck of a lot, and most of them don't bring anything to the table, let alone any sort of options acumen. So have someone like Uncle Mike here who could roll your time spreads, who could write your calls, suggest strikes, adjust positions, all these things. You should be paying a heck of a lot for that. So a guy like him offering to take on some lesser asset type clients, I think you guys should jump in on that with reckless abandon. So hopefully you guys are, because that is a great deal. And on behalf of Uncle Mike and the Viceroy and the Rock Lobster and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program and sending in such great questions. Don't worry, we'll get to them on our next episode of The Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.